to Ask Sloan. I'm Sloan.
I'm Ben.
Today, we're going to talk about investing. Investing 101. We're going to go to the basics. Okay. Since the pandemic, everybody is like all about being an investor, and I'm very excited about it. I think it's awesome, super smart. But there's a bunch of risks involved
Absolutely.
in investing, and definitely a whole lot of stuff that we can talk about to kind of help you out. Ben, what are you invested in?
So, I'm invested in crypto for one.
Ooh.
I've always been a huge blockchain believer.
Oh, he's a
And
blockchain believer.
yes, sir.
All right.
And I'm obviously invested in, just some index funds.
Obviously.
Yeah, you
Oh,
have to be
uh,
invested in the index fund.
okay. Which one? What's your favorite?
Come on, we can't do that.
All right.
um,
Okay.
but I will say, I'll tell you the markets that I'm invested in.
Okay.
So energy, definitely energy markets. I think obviously most stable. I know a lot about it. Artificial intelligence. I would say tech. What else? I would say one of the big four or two of the big four.
Two of the big four.
Yeah.
Oh, what's the
So
big four? Fang? You talking about Fang?
Fang,
That's
Fang,
five.
big five.
Okay.
But wait, no, because they ate one. No,
They ate one. Which one did they
Facebook,
eat?
Facebook,
Facebook,
Apple.
Apple,
No,
Fang,
Facebook,
Apple,
Apple. What about Amazon?
Amazon.
Amazon,
Netflix,
Netflix, and what's G?
Google.
Google. Yeah, you're right.
They ate one.
Yeah, I was thinking when Facebook bought Snapchat,
Did
became
Meta
Meta.
buy Snapchat? I don't think so.
Yeah,
What?
yeah,
No, I don't think so.
yeah.
I don't think so, bro. But it's okay. That's another conversation. But
Didn't they buy Snapchat?
no, uh, nope, no.
Oh
Facebook,
no, because that's why they
Facebook
have to
owns
create their own.
Insta and WhatsApp.
They bought Instagram and
Yeah,
WhatsApp. You're
yeah,
right.
yeah,
You're right. Right.
yeah. But now there's like
We'll cut that one out.
the new stocks like Tesla, Nvidia, stuff like that. So you're mainly talking about stocks,
Yeah,
okay? And then you mentioned crypto, which is not a stock, but it's kind of traded like a stock,
yeah.
depending on what you're buying. If you're on Coinbase, things like that. What other do you have any other investments or just stocks? And I don't mean
Um,
like specifics, but like
I
any
invest in
other
my retirement.
categories? Okay.
Yeah, so I max out my 401k. I have a Roth.
Awesome. I consider those financial products. Okay. So
Okay.
you can invest in financial products.
Yeah.
Okay. Awesome. Okay. What else?
What else? I would consider this an investment.
Hey, businesses. You can
Invest in
invest in
businesses.
yourself by investing in
Yeah.
a small business.
I invest in
Okay.
my education through
Okay. All right.
certifications.
Okay. That's a
You
little
know,
bit different. That's still investing in yourself, but
yeah.
the return on investment isn't monetary. It's
It can become monetary though.
no, because then that just becomes the business model. You can take your education and you can turn it into either a job, which is not an investment, or a business, which would
Yeah,
be an investment. So I feel that. I mean, it's still smart to invest in yourself.
yeah.
We definitely promote investing in yourself. Be a lifetime learner.
But I'm not invested in like any CDs or anything like that. If like,
Okay, certificates of deposits,
yeah,
another kind of financial product. Okay,
yeah.
annuities, things like that. All right, let's break it down for the people. Okay,
Okay,
so investments 101. Okay, you can get out your pen and pad, write this down if you'd like to. Okay, so the number one investment is real estate. Okay,
okay,
why is that the number one investment? Because most people buy their home, right? And their home is their first and their most valuable investment.
So you're saying the number one investment that people usually have,
Yeah.
but not the number one investment that people should have.
No, no.
Okay,
I'm not
okay.
saying what you should
It's
have is
important to
wrong.
have that distinction
I would
because
agree with that. I would agree
yeah,
with that. No, I'm saying I'm saying the number one investment, the thing that the most people are invested in is real estate.
okay,
Okay, and it's because how many homes are there in the United States?
many,
You're right. Okay, so and not all those people are in stocks. Okay, right. So so we got real estate. Okay, we got stocks and bonds. Okay,
okay.
we got financial products. Okay, financial products are going to be your retirement plans, your annuities, certificates of deposit. Okay, sometimes life insurance can be an investment.
Do people actually invest in bonds still? I've never heard a single
Let's
person
rewind
invest
to
in the
stocks
bond.
and bonds. Yes, people invest in bonds. There's a huge bond market. It's a baby boomer thing. Okay.
There you go.
All
Well,
right.
that's why I've never heard of
Yeah,
anybody
it's a
do it.
baby boomer thing. It's maybe a Gen X, a little bit of Gen X in there, uh,
Okay.
getting bonds. The bond market is highly specialized at this point. Okay.
Mm.
There's some very awesome things about bonds. Okay. Municipal bonds are tax free. So
I
if
don't
you
really know
want,
much about bonds, actually.
well, let's jump
Let's
into
talk
some,
about
let's
bonds.
jump into bonds real
Yeah,
quick.
let's talk
Okay.
about
You know
bonds.
what a bond is?
Not really, no. I mean, I've heard of a bond through the movie Holes, if you guys know the movie Holes, where he finds a bunch of bonds, like a treasure chest full
Okay.
of bonds.
And what was it? A bunch of paper?
It was a bunch of
Yeah,
paper, but he
absolutely.
became rich off the
Of
bonds.
course he did. So a bond is basically a promissory note. Okay.
Okay,
A promissory note is I promise to pay you. Okay. So this piece of paper represents my promise to pay you what you pay me plus some interest.
okay,
Okay. And so who issues bonds? Okay. There are corporate bonds. Okay.
interesting.
So corporations issue bonds. Okay. So right now, Meta is issuing a bunch of bonds. Okay. Why? Why is Meta issuing a bunch of bonds? Because they're building AI infrastructure. They're issuing bonds to build data center for AI. Okay.
Quick question regarding those bonds. If you buy a corporate bond, but that corporation files for bankruptcy or goes out of business, are you out of your money?
Bondholders are paid back first in a liquidation.
Okay, but what about in that liquidation if they run out of money? That's it? There's no
Bondholders are
insurance?
bondholders are paid back first in liquidation.
Interesting.
That's
Okay.
why you would buy a bond.
So the bank would pay off your bond for you. No?
No, the corporation is liquidating. The corporation is paying it, but they're liquidating. They're going out of business. They're in bankruptcy.
So you're
When
saying the bondholders are paid back before anybody else?
the bondholders are paid back first.
Okay.
Yeah,
All right.
yeah. It's more secure
Interesting.
and it's generally collateralized. So Meta is selling bonds to build
AI infrastructure.
AI infrastructure, which is a data center. Okay, it's land infrastructure. It's a big warehouse.
Servers.
It's
Yep.
servers. It's all those things. All those things can be sold, and then they're sold. And guess what? Guess what they do when they sell them? They pay the bondholders back. So bondholders get paid back first. Stockholders, they get paid last.
So if you're a bondholder, is there a specific time frame in which you know for a fact you will be paid back?
Yeah,
Okay.
yeah. The bond is issued. Here's a 3-year bond, 5-year bond. It's called a note. 3-year note, 5-year note, 10-year note.
Interesting.
Okay. So when you buy a bond, it'll say, "Hey, this is a 5-year bond."
Okay. So
Okay.
now I
So
see why it's
so
a boomer thing.
so
Because
then
the interest is guaranteed. That's why.
the interest is guaranteed,
And
and
usually
it's and
boomers
it
are low risk.
and it's not high. It's not high interest. Okay. So you're not going to beat inflation right now. Actually.
Okay.
Okay. The United States Treasuries, those are bonds. Okay. Um, mud districts. Okay. Mud districts are municipal utility districts. Okay. And it's for our water system. And our water system is made up of a bunch of cities, utility districts, and mud utility districts. Okay. Or municipal utility districts. They issue bonds to build water treatment plants, lay civil engineering for the piping to the homes, so on and so forth. So they issue bonds to raise that money. What pays those bonds back? The revenue from your water bill.
Okay.
So the municipal utility district, there's no owner. So there's nobody to steal your money. It's a board of directors that are voted in and they can't access the money. So there's a financial advisor that manages the money. Okay. So there's advisors and lawyers. There's this whole like structure. And then they sell you the water. You pay the water pays the bonds back. But when you get the interest from those bonds, they're municipal bonds. They are tax free. That income is tax free.
So not all bonds are tax free, only some are.
Not all corporate bonds are not tax free. Municipal bonds are tax free.
And you pay capital gains tax on the corporate
You
bonds?
pay, well, it's interest income, and so it kind of depends on what note you're buying. But capital gains is generally long-term capital gain. It is capital gain, but
Yeah.
short-term capital gains is less than a year, and it's ordinary. It's taxed at ordinary income. There's
Okay.
long-term tax capital gains that have that lower tax bracket.
I see.
So the bond is going to have a year associated with it. It's going to have a rating. Is it a triple A, double A, single A, triple B, double B,
Well,
single
credit
B?
rating?
It's basically a credit rating. And that credit rating is your risk profile. So if it's a triple A rated bond, it means you have the highest potential. It's like the most secure thing you can buy.
Yeah.
You have the greatest potential, the lowest risk
So I'm
of
assuming
getting
that's
your money back.
based off company credit, right? So if you were to have like a company like Apple, they would have a AAA, I'm assuming. Or but if you were to have a company like I don't know, Bank of America or something, I'm assuming it's not going to be a AAA.
And I would not be able to conjecture on like the credit ratings of the issuing of bonds. I'm not That's not my area of expertise, but for sure when you issue a bond, it has to go to a specific regulator in which they're going to give you that rating. I don't know if it's Moody's or who it is necessarily, but there is somebody out there, a third
Okay.
party that will rate your bond, give you that credit rating, and then that will basically give you your risk profile in the market.
So the rating is based off of the company
It
credit?
is. It's based off of whoever's issuing the bond.
Okay, just based off company credit.
and
Okay.
and and whether they've done it before, whether they've paid them all back, all the different I don't know all the different criteria for that,
Okay.
but you definitely will get a credit rating.
So now let's talk about stocks. So we understand bonds. Now stocks,
Well,
we can talk a little bit about.
let's real quick kind of continue to go through the list. So
Oh, there's more.
oh yeah, yes, we got real estate, okay, we got stocks and bonds, we got financial products,
Okay.
okay? We got raw materials, okay? We got commodities, okay? So
Okay.
oil, gold, silver, lithium, corn, soy beans, okay? Like raw material and farm products, okay? Even livestock, okay? All of those things fit into that category and are generally traded in the futures market, okay? Now you can purchase corn and sell it, okay? All right? You can purchase oil and sell it, or you can trade the futures of it, believing that the price is going to go up or go down in the market tomorrow.
Okay.
Then there's currencies, fiat currencies. Okay, people call it forex exchange.
Yeah,
Okay,
we know a ton of that.
that people were huge in that for a
Yeah,
while.
the people back at home, they love forex.
Do they? Do they love it? It's I don't. It's never. I'm never going to play in that game. It's subject to insane volatility based on government upheaval, and so currencies can go to zero pretty quick. Then there's cryptocurrencies. Okay.
Yeah.
And like I said, cryptocurrencies somewhat trade like a stock, but you can also buy them and be a custodian of them. So it's kind of like a commodity. Crypto is still in this space of like, we don't know what it is.
Yeah.
Um, and then let's see, is there one, what was it? The real estate, we did all that stuff and a bag of chips. Businesses. You can invest in businesses themselves, like like buying a business. Okay, you can go buy a washateria. Okay,
Yeah.
you can go buy a bowling alley. Okay, you know what I mean. You know what I mean. So there's businesses. So that's kind of like your categories of investments.
Yeah.
Okay, and what is an investment? An investment is when you put capital into something and you're expecting a return on that investment. And investments either gain or they lose,
Yeah.
and they will gain or lose. Well, they will gain and lose. So the market never goes straight up
Yep.
and it never goes straight down.
Market's
So
volatile.
it always goes like this.
Yeah. Just to give you some context on the forex joke. So I want to say around uh most likely around like 2019, maybe 2018, there was this huge like forex um just trend going around where people would get like these giant groups and get a bunch of people to apply to their forex group,
Mhm.
and they would just all do forex together, and you would pay somebody to teach you to do forex.
Yeah,
That was the forex joke. The people at home don't actually like
like
forex.
forex. No, 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 and
That
and
much.
and I remember that, and I mean that's
Yeah.
still going on. The same thing with options. Okay,
Mm.
that's really uh, what got me into trading. You know,
Options
and I
trading.
keep using this thing. I had a client of mine that was like, "Hey, let's trade options." Okay, like go learn it, and like I'll put the money together, and let's start trading options.
Mm.
I was like, sounds great, you know? So
Yeah.
we did it. And then one day we lost 150 grand and he started running around the house talking about, oh my God, I gotta sell my house. Oh my God, I gotta sell my house. I was like, bro, I can't play this game with you anymore. I can't do that. That's not gonna work out. So let's use that as the example of I don't recommend becoming a trader.
Yeah, I
Okay.
mean, most traders lose, right? They can't beat the market.
Most traders lose money.
Yeah.
It's true. Are there some traders out there that make money? There are. They're very disciplined. They spend a lot of like time and energy like continuing to do. I mean, I know people like they trade in the market every day. Okay, they make a few $100 a day or whatever. But they win and lose.
Yeah, of
Okay, so you
course.
so you got to have a stack and you got to be okay with winning and losing. Like some people can't handle the losses and stuff, and you really got to understand the strategies you're deploying and things like options are very complex instruments.
Yeah.
Okay, they're mainly used as insurance to be purchased properly. It's a hedge against your actual stock purchases. Okay, but when you're just trading options, the issue is the market can turn on you extremely quickly, and then you have a very limited window of time associated with your trade. And so if
Yeah.
you're not in the zone in your time, then you lose. Whereas a stock, you can hold on to that for as long as you want.
Yeah, honestly, I learned that the hard way. I tried to trade options on on vegan meats.
Ah, okay.
I was following social media. Just like I was trying to get into trading, right? Like day trading here and there, and then started to see this trend on, oh well, they're gonna do this vegan meat collab with Burger King, and I was like, all right, options on vegan meats, we're going all the way. I lost many times.
This is the impossible burger.
The Impossible Burger. That's the one. Yeah.
What's crazy is like Chipotle went like bloop, and then it went like bloop.
Yep.
Mm.
Yeah.
So like that's the thing. And so the number one way to make money in investments, okay? The number one way is to invest in what you understand. Okay. And everything I'm gonna tell you is gonna come straight out of Warren Buffett. All right.
Okay.
And you read his books, you read his letter to shareholders, okay?
Yeah.
Like he is the I'm gonna say the most successful investor
Of all time.
of all time.
Yeah, 100%. Yeah.
And what he does is what's called value investing. Okay.
Yeah.
So he does stock analysis. Okay. And stock analysis is looking at an organization that's issuing stock, looking at the fundamentals. Okay. The fundamentals are who's running the company, what's their product line, what's their market, what's the potential for that market later. Okay. Um, ChatGPT put several markets out of business. Just the day it came out, these other markets were gone.
Yeah.
Okay. Because like they were obsolete now. You know what I
Yeah.
mean? We don't CDs. Like we don't have CDs. Do you even know what a CD is, Ben?
Yeah.
Okay. So
Man.
so technology changes, so on and so forth. Like, you know what I mean? So it's like it's super important to understand how all that kind of works.
Yeah.
But value invest so fundamentals, who's running the company, what's their product, what's their market, is long term
Yeah.
gonna be, gonna have opportunity. Then there's sentiment.
Wait 1 second. For the people at home, a CD is a disc that used to go in something called a DVD
Oh, CDs went into DVD players? I think they went into CD players. There were
No?
DVDs too.
Oh, the DVDs are different.
DVD.
I don't know either.
Ben, come
Wait,
on.
no, you could put CDs in DVD
You
players, man.
could, but I mean, depending on the DVD player, it's not gonna
Exactly.
work.
I had the premium DVD
You
player,
had the
man.
premium that played both CDs and
And
DVDs. You're
DVDs.
so good at this, bro. Um, So not a certificate of deposit, which is a bank product that's called
Yeah.
a CD. Okay.
Let's talk
But
about what you used to listen to music on in the little circle.
right, the Discman. So fundamentals, then there's sentiment. How do people feel about it? Okay. The GameStop meme stock extravaganza was all based on sentiment.
Yep.
Okay. I feel like it. I like the stock. I feel like Tesla. Tesla went to $1 trillion valuation based on sentiment.
Yep.
People believed in Elon Musk, believed in Tesla, believed in the future of it. It wasn't worth $1 trillion. Even Elon Musk got on and said, "Hey guys, we're at $1 trillion. A little, we're a little bit overvalued at this point." Okay, and the market will always correct itself. But if you buy into the hype at the top, you got man, if you fall, you got a long way to go, and then you
Yeah.
got a long way to get back up top. The last thing is called the technicals. Okay, so looking at the chart.
Oh
Okay,
man, I read this book on technical investing and I tried to act on it. I do not recommend.
yeah. So it's one of three. Okay, if you're
Yeah.
gonna really be like a professional investor, you want to understand all three of these things. The technicals are about timing, and you're never gonna time the market. You're
Yeah.
just gonna pick. Okay,
That's mostly about trends, yeah? Right?
technicals is about trends,
Yeah.
yeah. And the way that I learned that it works is a market maker, and this is for like investments, 201, okay. But a market maker, which is a financial institution like JP Morgan or Capital Street or whatever, a market maker, they take the orders, okay. So the orders come in and they stack up. Okay, and so then they're just filling the orders. This is a buy order, this is a sell order, it's a buy order, sell order, buy order, sell order.
Yeah.
They're just going down. So you see it, it's going up. Okay, here's all the buy orders. Okay, okay, now it's going to go down. Here's all the sell orders. Okay, okay, here's all the buy orders coming back. Okay, here's all this like. So they're
Yeah.
just going through the stack, and so
Yeah.
you see the ticker. It goes up a couple cents, it goes down a
Goes
couple
down.
cents, goes up a couple cents. If you hit a whole bunch of stack of buys, a big old stack of buys, it's going to go up.
Yeah.
But what's coming? The stack of
So
cells. Okay. So like if you can anticipate that, which you can't, okay,
yeah.
that's kind of how that works. But a value investor is saying, okay, hey, we believe that this stock is really worth $100 a share. It's currently trading at $70 a share. Okay. We're a buyer at $72 a share. Okay. We're not a buyer at 70. We're at 70 because we believe it could go down to 68. We don't want to lose that. We're going to wait till it rebounds and starts going back up. We're a buyer at 72. We're a seller at 95. So we're going to buy the stock at $72 a share. When it gets to $95 a share, we're going to sell it. That's what analysts, when they give their thesis on purchasing a stock, they're going to tell you when their in is and when their out is, and it's all based on that criteria that I just mentioned.
Yeah.
Okay.
But not all analysts are based off technical analysis.
No, no, no. Three prongs:
Yeah.
fundamentals, sentiment, and technicals. And you
Okay.
you want to have all of that analysis in your thesis.
Yeah.
You don't just buy stock based on sentiment.
Yeah.
You
That's
don't just buy stock based on fundamentals.
yeah.
And you don't just buy stock based on technicals.
I honestly that's a great point because I read Intelligent Investor by Benjamin Graham.
Oh, love
After
it.
I read that book, I was like, I'm only buying stock based on fundamentals. I will never buy a stock based on sentiment. And then, with Tesla, I lost money.
Yeah, because you bought at the height of the sentiment.
Yeah.
Okay. You didn't buy the value of the stock. You didn't look at the
Well,
fundamentals.
honestly, it's actually it was the opposite. It's because I sold too early
Oh,
because of sentiment. Like I I was like, all right, well, I think that the value of this stock is going to depreciate because of just the fact that, Trump is going into office and then renewable energy is going to go down. People aren't going to want to electrify really. And then I also saw at the same time um, that although people are going to not necessarily want to electrify because the tax incentives are gone, they were electrifying the cars around, so the competition was going to increase. So it's like these like a bunch of different things. But point is that the sentiment for it wasn't necessarily what I thought it was going to be, and so based off like what fundamentals, I was like, all right, I'm selling, and I lost money because they actually went up.
and then it went up. So the the number so back to the number one strategy for making money and
Yeah.
investing is to buy and hold. Okay, there's two major rules. The rule of 72s is that everything doubles in value every so often. Okay, the stock market usually doubles in value every 7 to 10 years. Okay, so investing is not a short term thing, trading is a short term thing.
Yeah.
And I'm not like, you have to have a special skill, talent. You got to have a special talent to make money trading. You just do. It's a 3% game. So if you think you're one of the 3% of people that can trade and make I don't know, do you remember that show where they were like, "Hey, it was like he would go and he'd like buy a bottle of water and he'd go trade somebody a bottle of water for like a can of beer. And then he'd go trade somebody the can of beer for like a bottle of Everclear. And then he'd go trade somebody the bottle of Everclear for like a keg. And then he'd go trade like, and I'm using like liquids
Yeah.
right now, but you know what I mean? Like he would trade up.
Yeah. I didn't see that show, but I did see that on Reddit. This guy began with a penny and eventually he had a house.
Okay, right. Okay.
Crazy.
And so he traded up. Okay.
Yep.
So he took one thing and he went and found somebody that penny was worth something to trade to him, that it was higher value. And then so on and so. So the true value of something is what somebody's willing to pay for it at any given moment. That's the true value of something. Okay. So, but again, I'm not like, I couldn't run a pawn shop. Like I have no idea. Like I can't price stuff. You know what I mean? Like I'm not an antique guy. Like I'm not gonna
Yeah.
go antiquing and like, do you see this chair right here, bro? That $8,000 chair. I'm gonna buy it for $1,000 and make, Nah, that's not me, bro. So buy and hold. Okay. All the stocks that I have purchased, I don't plan on selling them.
Okay.
I have no plan on selling them. I'm not waiting for them to get to a certain value to sell them. I'm going to buy them and hold them.
Yeah.
Now, will I rebalance? I will pay attention to them and I will think about rebalancing, but it'll be based on fundamentals. Okay. Is this going to go out of business? Like, I don't want it to go to zero. Or if the stock's just never going to perform, then I'll get out of it and put it in something that is going to perform. Like, I will rebalance, but
Talking
I'm
about rebalancing your whole portfolio.
my portfolio of stocks.
Okay.
Okay. But I'm going to do that. Okay. But my strategy is to buy and hold. Okay. So if I got Bitcoin, I'm just holding Bitcoin. I'm going to hold it for a long time, 5 years, you know? So if you're an investor, you need to think that your investments are 2 to 5 year gains or 5 to 10 year gains.
You see, that's something I struggled with. I'm obviously, not the most mature investor, right? And so like I think I've learned a lot through trial and error, right? Because you could learn so much from like reading books, but a lot of the things I feel like just in life in general, you learn after you go through them,
You got to start doing it.
right? You
You
just got to
definitely got to
start
start
doing it.
doing it.
And so like with buying and holding for a long period of time, you buy and you hold, but you can't help but hear the news, right? And you hear the news and you're like,
But
"Oh,
that's
I should buy
sentiment.
more."
But
And
that's
it's
sentiment, bro.
sentiment, right? But
Mm.
the thing is that
And it's
sentiment
so
will grip
dangerous.
you.
It
It'll
can.
grip you
You
and
can.
you really need to like ignore. But then, the thing is that makes it so difficult is like, when do you pay attention?
So you're and we're running a little bit out of time, but you're talking about, again, the psychology of money.
Yeah,
Okay. So if you're investing to make money now,
yeah.
you're not an investor. Stop it. Like, don't even play. If you're watching Mad Money and getting all hyped up and crazy and like, oh, this is the thing, like, you ain't gonna make no money.
Yeah,
You're not gonna make no money.
yeah.
Look, Donald Trump came out and said something about a stock. I think it was called Workhorse or something. Okay. I immediately bought $10,000 worth of like 10,000 shares or something. Okay. We made like 30 grand in an hour. Okay.
Wow.
And my guy was like, okay, sell it. Okay. So I sold it. He's like, okay, buy it again.
No
I'm like,
way.
no. He's like, yeah, buy it again. I'm like, no. He's like, no, buy it again. I bought it again. We lost all of it the next day because it was a pop stock. It was like,
Yeah.
pump and dump.
A pump and dump.
Yeah, the stock wasn't worth nothing.
Yeah, that's how it
Okay.
is with crypto.
Okay.
A lot of crypto's pumping.
So you got to be real careful.
Yeah.
Okay. And if you hit a lick, great. You hit a lick. Okay. But you really have to separate your emotion from it, right?
Yeah.
Okay. So number one, we'll leave them with this. Okay. If you really want to become wealthy off of investments, you need to have a buy and hold strategy. You need to hold on to that investment for more than 2 years.
Yeah.
Okay. Traders lose money.
Yeah.
Okay. That's your tip for today.
Yeah. And honestly, I'd like to add one more thing.
Go ahead.
Only invest what you can afford, please.
100%. Like investments are never touch it money.
Yeah.
It's after your budget.
After your budget.
Is you don't put milk money into stocks and bonds and real estate and
Yeah.
crypto. You put your I don't need this money into you put your Gucci money into your portfolio.
Go back and listen to our episode on how to get out of debt.
Right.
Until next time, guys, like and subscribe. Thank you very much. Make sure that you share and make sure that you follow on Instagram
Hit that
and TikTok.
notification button so you know when the next episode comes out.
See ya.
Every Tuesday.